Axon is a perfect example of a company that sometimes it's just good to buy a great company and hold on for dear life no matter the price. This is a insanely expensive stock right now, but the stock keeps moving higher. Shares are up 30% just in the past week. This continues to be one of my largest holdings. Held on to it for almost a decade now. But why am I worried about the valuation? And there's one major red flag in not only the valuation, but the company's operating numbers and guidance for 2024. So I want to dig into all the results. And I'm just going to state up front, this is a phenomenal company, phenomenal business model, phenomenal momentum behind it. The question is it an appropriate price to pay for the stock? That's what I think we're really debating as investors. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to the results. This is a high level look at the results. You can see 34.6% year-over-year revenue growth. That is just a phenomenal number for a company that's going to do about $2 billion in revenue this year. So $504 million, gross margin maintained at a really high level, 60%. I'll get to the breakdown of that, but it's actually high gross margin in both the TASER segment and then also in the cloud segment. That was always what I think investors thought margin was going to be driven by that cloud side. But TASERs is a really good business too. Operating profit, just $33 million. I'll get to the reason that the profit numbers are actually on decline because this is down from $40 million a year ago. This included $75 million in stock-based compensation. This is going to be a theme throughout this earnings report. Net income, $41 million or 53 cents per share. Here's where you get to the challenge. 53 cents per share for a stock that is trading for $361.73. Means that the price to earnings multiple is incredibly high for Axon right now. Cash and equivalents, almost $1 billion, so they do have plenty of money to grow operations in any way that they deem necessary. So they always break things down into software and sensors. That's really the body camera side of the business. So the sensors is going to be the body camera itself. Sensors and other, $112.4 million worth of revenue. Gross margin is going to be relatively modest, 38.9%. The cloud services is what goes on top of that. So that's going to be not only cloud storage, but all the software that Axon has built to go along with their body cameras. This is where the company has really expanded the price that it can charge for the suite of tools that it's offering. And the advantage is that this number keeps going up because they're increasing that price over time on a per seat basis. So revenue nearly $200 million on a quarterly basis now for just those cloud services, and the margin, like I said, extremely high at 72.4%. Tasers, don't sleep on the Taser business. Taser business is as big as the cloud business and is still growing at an astounding 27.6%. So this was really the foundation. I mean, the company's name used to be Taser International. This is still just a great business, and it is one of those value-added tools that goes along with the body camera that makes this a suite and more of a full platform that law enforcement agencies can build around, because you have the Taser solution, you have cameras that can go in cars, you have cloud, all of these things tied together. And the margin here is 60.4%. This is something that was a little bit weak a quarter ago. They talked a lot about that. They're expanding production. So there were some costs that went into that, but those margins have increased nicely in the last quarter. This is what's new over the last really few years as far as a focus, the total contracted future revenue. If you've been following Axon for a long time, you know that a decade ago, they were not contracting services out multiple years. Then they started doing multi-year contracts. So 3-4 year contracts. Now they're doing 10-year contracts in a lot of cases. So those contracts now in total, $7.4 billion, the net retention rate, net revenue retention rate, 122%. So this is a software number. This is basically how much is each customer spending this year, and then is that number growing next year? So the average growth per customer is 22%. That's what this says. And the annual recurring revenue is $850 million. So no surprise that this number, the total backlog, is getting closer to being 10 times the size of recurring revenue. You're never going to actually get to 10x if all contracts are 10 years, but just an indication over time that we're signing longer and longer contracts for Axon. So what is the company expecting for the full year? Growth is going to continue. Almost 30% growth expected, $2 to $2.05 billion. They always kind of sandbag these numbers a little bit, so don't be surprised if numbers are a little bit higher. Adjusted EBITDA, $460 to $475 million. For perspective, company's $28 billion market cap means that the stock is trading for 59 times the high end of adjusted EBITDA. That is a shockingly high number, especially when you look at stock-based compensation. Stock-based compensation expected to be $355 to $370 million for the full year, up from $215 to $230 previously. It's related to a incentive program that the company put in place earlier this year. But look at this as a percentage of revenue. Stock-based compensation now approaching 20% of revenue. That is an incredibly high number. It's going to be incredibly dilutive long term. And that, along with the valuation, I think is really what investors need to consider. Is this a company that's worth this price when a lot of the upside is going to be going to employees through this stock-based compensation plan if the stock continues to rise? Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Like I said, this is a stock that I own and I've owned for a very long period of time. But multiple things can be true here. It can be true that Axon is a phenomenal company from an operational perspective. It can also be true that the company is paying way too much in stock-based compensation, giving away way too much of its potential upside, which at this point needs to be extremely high because of the price of the stock. So this is really the conundrum that I think investors find themselves in. If the stock price remains where it is today, I would consider taking some of my gains off the table because the price has gone so far. Multiple expansion is now not going to be a catalyst or a tailwind behind Axon. In fact, multiples are probably going to be a headwind for Axon. I mentioned that almost 60x price to adjusted EBITDA number. That's incredibly high. Another way to look at it would be price to revenue. That's about 15 right now. So no matter how you look at it, Axon is absolutely priced to perfection. Now, the company can continue to execute to perfection over the next decade, and the stock may not go anywhere just because it's living up to that price and what's already priced into the stock. I think that's really the challenge for investors right now. So phenomenal quarter, shows it's going to be another phenomenal year, but the market is also expecting a lot, and the recent jump in share price is making me question whether this is one that I want to continue to own given all the opportunities that are out there in the market today. I've covered on this channel, there are a lot of stocks that are trading for less than 10, less than 15 times earnings or free cash flow, who are buying back stock at a rate of 10% to 20% of shares outstanding being retired on an annual basis. Those are the kind of values that I would like to be acquiring now. May consider selling some of these more expensive stocks and moving into those cheaper stocks. But that doesn't mean that it wasn't a phenomenal quarter from Axon. But let me know what you think of the quarter and the price of the stock in particular in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.